I've been thinking lately about how traders process information, how we see the world. What has interested me is the notion of how, when presented with information like this, we reach some sort of cohesive, coherent decision. The interesting thing about trading is that at its heart, it is an information management process. We have to somehow take all the disparate pieces of information we're given and make some form of coherent decision. And this decision we make has a binary outcome. We are either right or we are wrong. The problem with the way we see the world, and the issue that has prompted me to do this little video, will become apparent in a moment. Watching traders over the years, there seems to be a duopoly of the way we think we see the world. We think that when we encounter trading information that it goes through some form of rigorous analysis, that we put it through a series of mental sieves or mental formula that derive a answer for us that is reasonable, and it is an answer that everybody would agree with. We think that as we process information, that we do it logically and cleanly and clearly. Unfortunately, that's not actually true. Instead of being like Mr. Spock, our approach to processing information is more akin to this. We see the world through a series of perceptual filters, so we don't actually see the world as a clean construct, and by extension we won't see trading information as a clean construct. We will see it through filters, and these filters reflect our own biased way of seeing the world. What prompted me to start thinking about this was I was cleaning out one of my image archives, and I came across this chart of Enron that I'd had stored away. Some of you may have seen this before, and I've used it in presentations as an example of what can go wrong. For those of you who are unfamiliar with Enron, Enron was a con. It was set up as a con, constructed as a con, run as a con. And it went from being worth zip to around about $95 a share. The intriguing thing about Enron is that despite Wall Street being aware of it as a con, they continue to recommend it. And that is a very, very interesting feature for us. That tells us a lot about individuals. The interesting thing about individuals is that we think that we are somehow different and distinct from one another. Largely we're not. Our patterns of behaviour are largely identical to one another. We can't help this. So we have to work very, very hard to overcome the sort of biases that afflict us. You might think that within the sociopathic sort of mindset of Wall Street, that continuing to recommend a stock that you knew to be a con would be accepted behaviour. But we see all sorts of variations in this behaviour. I spoke a few months ago about the idiocy that surrounded the fanboy approach to Apple and the inability to move beyond the biases that people had there, with everyone trumpeting that Apple was going to $1,000 a share, and it promptly went to $400. When we begin to look at something like Enron, we see something very, very interesting, and I was able to put together a series of broker recommendations and to track how they were a form of confirmation bias that brokers looked to. And I suppose if there's an overarching theme of this little chat, it is the notion of confirmation bias. When we make decisions, the interesting thing about a lot of the decisions we make is that we make the decision, then seek justification for the decision. So you may have decided to already buy XYZ share. You then look for reasons that justify that decision. So the decision-making process for you is backwards. Instead of looking at the information and then making a decision, you make a decision and then look at the information. So we have a reverse decision-making process. This is a form of confirmation bias. We're desperately looking for those things that confirm a decision we've already made. When we look at the recommendations surrounding Enron, and Enron is a perfect case study for this sort of thing, we get this sort of approach. On this table, there's a few pieces of data I'll walk you through. Up the top we have date. Down the left-hand side we have brokers, and along the bottom I've actually put in the prices at which these various recommendations were made. Many of the brokers will be unfamiliar to you. That's an irrelevancy. All that really matters is that people in a perceived position of authority were making recommendations on this instrument. There's a few points that can be drawn from this. The first is a number of brokers simply dropped Enron from their recommendation list. My impression of this at the time was that it was very much an attempt to hide the fact that they'd ever been involved in Enron. What is also intriguing is the number of brokers who recommended it as a hold, which is a recommendation I've never really understood. You're either a buyer or a seller of a stock. It's as simple as that. You either want to have a position and add to that position, or you want no position at all. So the notion of a hold is somewhat of a weasel expression. But you can see a number of them had it as a hold as it collapsed completely. Some even continue to have it as a buy. The interesting thing is that many of them continue to have the recommendation that Enron was either a hold or a buy, even in light of knowing that it was a con, even in light of knowing that it was a complete and absolute fraud and had been exposed to such. So what you would see is that brokers were desperately clinging to any piece of information they could get that justified their existing decision. In part, there will be ego defensiveness involved in this, and you could expect that ego is a guiding principle for brokers. So much of it will be that defensiveness, and you can see that in the notion that some had simply dropped Enron. That is an attempt to hide that you've been involved. If you hide that you've been involved, then you don't have to admit your mistake. If you don't have to admit your mistake, your ego is therefore intact. But what is tremendously interesting about this is that if you look at the price scale along the bottom, even as Enron had lost nearly 99% of its value, it was still being recommended as a hold. We have local examples of this following the GFC. We saw this with the likes of ABC Learning, that even as the stock was disappearing, it was still recommended as a hold. This notion of looking for things that confirm an initial opinion is a very, very powerful force within traders, and we can see it in the current environment. There are vast numbers of analysts, both local and domestic, who refuse to accept that for almost the past 4 years, the Dow Jones has been going up. The number of arguments I've seen against this range from what you would consider vaguely reasonable to the completely insane. There is an inability to recognise that if you look at a chart such as this, you can track back to 2009 and you can see that the Dow has been trending up since then. We have arguments ranging from the usual conspiracy nuts through to silly arguments that it can't possibly be going up because there are not enough trucks on American roads. The simple fact of the matter is that it has been going up. And the simple fact of the matter is that it is now at an all-time high. Markets make all-time highs. It is simply part of their dynamic. What is interesting is the way people cling to the argument that it should not be going up. But the actuality is that it is going up, and it has gone up. This may change. It could change tonight. We have no way of knowing that. But what we do know looking back is that there is a strong trend in place. But, as I say, the trend might end. So the issue becomes, why won't people accept that it is going up? Largely they won't accept because they're already wedded to a given belief system, and they cannot shake that belief system. This notion of being locked into a way of believing is fatal for traders. And I know many domestic traders who refuse to accept that the market is going up. They're constantly looking for an excuse as to why the market should be going down. Our market certainly hasn't had the recovery that the US market has had, and there may be any number of reasons as to why that is. But the simple fact of the matter is that the market is going up, and you need to ask yourself, are you actually aware of that fact, and are you taking advantage of it, or are you clinging to a past point of view?